Now, what you need to understand about mortgage insurance is that is not there as a protection for you. That is actually there as a protection to the lender that you're paying for. Okay. Now, in most cases, the vast majority of people do not put 20% down, which is okay. I mean, there are mortgage programs where you can put 0% down, 3.5% down, 5% down. I get it. The vast majority of people operate that way just because the cost of real estate is higher than what it used to be. So therefore, it's going to ultimately cost more money to get into a property. Still well worth it. I just did a live on that a couple of weeks ago to break down the cost of waiting. So you should check that out. But when it comes to mortgage insurance, your score plays a direct role in the cost of that insurance. So let's think about Minnesota right now. I would say right now the average home price in Minnesota and the Twin Cities area is probably sitting around 380,000, maybe a little bit more. So if you're someone and you have a 640 middle score compared to someone, let's say, has a 720 score, I can essentially guarantee you more than likely, I have to pull up the calculator, I don't have it in front of me, but I've done this enough to know just by having a score improvement from 640 to 720 plus, you're probably going to experience anywhere from $200 to $250 a month in savings just on that mortgage insurance. And that's on something that doesn't even benefit you. So think about that. Let's say it's $200 a month in savings. All right. Well, that $200 a month, just by having a better credit score, ultimately means that one, you're saving that money if you still purchase the same, the property at the same exact value, or you now have more buying power. You have $200 more in wiggle room, which ultimately increases buying power, which means you can ultimately get more home, which in that respect, that does benefit you. Think about that. So instead of paying out more when it comes to mortgage insurance that you could have avoided if you just improved your credit, which does not necessarily benefit you directly, it's a protection for the lender, you're now taking that power back. You now have more buying power. You can qualify for more home, and you can ultimately get what you want. So it's very important to understand that credit plays a role in many things that most people don't even realize. It's far more than just interest rates and lending. It's insurance is a big one. Your life insurance is based on that.